After the worst survey on record during the initial COVID-19 lockdowns in the spring, Export Development Canada's Trade Confidence Index has increased by more than 20%. In our latest TCI conducted in October and November, the index rose to 67.5 from a depressed 56 in May, the lowest score since the survey began in 1999. Well, it's a great relief to see such a broad-based rebound with all 5 TCI index elements bouncing back, led by improved outlooks for Canadian exports and domestic sales. All regions made gains, with Ontario now the most trade confident in the country. All firm sizes picked up, especially large companies, and all sectors rose. Infrastructure and environment had the largest gain, while information and communication technology remains one of the most optimistic sectors, reflecting the rapid shift to online activities during the pandemic and the expected benefits to come from major capital spending on upgrades in 2020. This rebound comes as both global and Canadian trade data for the second and third quarters of 2020 have been better than expected. These survey results are a noticeable improvement from the spring and suggest Canada's trade rebound is likely to continue into the first half of 2021, as shown in the chart that accompanies on the written portion of this survey readout. However, with a second wave of COVID-19 raging in many parts of Canada, our economy isn't out of the woods yet. For comparison, the overall TCI index remains 3% below its pre-pandemic level, and our current reading is similar to other fragile times in Canadian trade, such as the dot-com bust after the U.S. terrorist attacks on September 11, 2001, the global financial crisis in 2008-2009, and the European credit crisis in 2011-2012. Well, that's sort of a daunting list of negative events, and that's where we happen to be right now level-wise. Well, the negative COVID-19 impacts continue for many, but more companies are reporting positive impacts. Our survey suggests the vast majority of companies, almost 80%, are still producing below pre-pandemic levels, reflecting depressed global demand. When asked directly about COVID-19, 2/3 of respondents say the pandemic had a negative impact on their sales, with nearly 1/3 of exporters citing a high negative impact. And the current trade climate that still includes pockets of protectionism also continues to be a key challenge for 1/3 of exporters. The good news is that almost 1 in 4 now say the COVID-19 adjustments have been positive for their sales. There is a significant increase of 9 percentage points from earlier this year. This likely reflects not only the highly unequal nature of the shock across sectors in the K-shaped recovery, but also that more firms are pivoting their production to take advantage of new pandemic demand trends. Cash flow concerns were raising alarm bells at the start of the crisis, but after a wave of government programs were rolled out to support Canadian companies, thankfully this issue has fallen significantly from our last survey. Moreover, as the overall economic outlook continues to improve, a rising share of exporters, call it 38%, plan to increase investment over the next 2 years and hire more workers in the next 6 months, just at 37%. So that's a pretty high percentage for those two responses. For the latter, more firms report difficulties hiring skilled labor, a concern we heard firsthand in virtual presentations across the country, especially in Atlantic Canada. Record high drive to diversify is another theme. Since we started asking such questions almost a decade ago, the highest share of respondents on record now say they're planning to export to new markets. That's 74%. Or 28% who say they're ready to invest outside of Canada. That's a highly risky venture, and so that's a particularly high number of those. We saw a similar diversification push during the tense North American Free Trade Agreement renegotiation, but this reading is even higher. More companies that plan to export for the first time are eyeing the perennial favorite market of the United States. For those looking to expand their markets to new markets, or their exports to new markets rather, Europe and Australia are also top of mind. For outward direct investments, more firms are looking to China and India, while fewer are looking to invest in the UK, which may reflect concerns over the ongoing Brexit saga. Canadian exporters expect a slow, choppy recovery. Looking ahead, pandemic-related sales impacts are expected to last longer than our last survey. At the global level, 2/3 expect the recession to last longer than 1 year. And with the rising wave of COVID-19 cases, a slim majority, at 53%, now expects a double dip or a W-shaped global recession and recovery, a 9 percentage point increase from last time. When our EDC survey goes back into the field in April and May 2021, let's hope the vaccine rollouts have begun and the TCI continues to strengthen, reflecting increased optimism from Canadian exporters about the durability of the global economic recovery. Well, until we return in the new year, in the second week of January, we sure do hope that you have a wonderful holiday time. Merry Christmas, and we will see you in the new year. A very happy new year to all of our readers.